Lisa, great to see you. It's a great setting here. We're at the Fortune Brainstorm Tech Conference in Park City. So what a great environment. How are you?
I'm good, thank you. It's always terrific to be at a conference in the mountains in the summertime.
It is indeed. Winter's not so bad either.
Winter's not so bad either, exactly.
So we've been here for a day and a half. There's a couple themes that have already developed. Artificial intelligence, AI, right on everybody's mind, obviously. But I think the other one that seems apparent to me is the IPO market, right? We have a bunch of private companies here. We've got tech investors. And one of the questions I keep hearing is, when is the IPO market going to open? You're the co-founder of a prominent IPO advisory firm. Seems like that's right in your wheelhouse. What are your views on when the market reopens?
I always want to answer that question by saying, it'll be Wednesday at 3. So 1, no one exactly knows. 2, we're definitely getting closer, and I personally think it's Q4. And that doesn't mean there will be a deluge of IPOs, but I think we'll see a few venture-backed companies say, you know what, the time is right. And I think that's for a couple of reasons. 1, they all raised a ton of money in 20 and 21, but they've been spending it. And it's nice to replenish the treasury. 2, institutional investors have shown a real interest in being willing to purchase new issues at the right price.
So we've only seen 17 non-SPAC IPOs this year, right? So-called regular way IPOs, raising about $7 billion. There was the Next Tracker IPO in the early part of the year. We were a book run on that transaction. There was the Kenvue IPO. And more recently, Kava. Those 3 alone make up almost $5 billion of the $7.5 billion. So it's kind of narrow from that perspective. They're big companies, they're well known. From your perspective, what is the profile of a company to go public today to be successful in today's IPO market?
You're going to hate my answer, which is it depends. It depends what business you're in. It depends how rapidly the company is growing. And it depends how compelling and believable the business model is. Surely, whereas profitability didn't matter at all in 20 and 21, a believable path to profitability is critical. And frankly, it's expensive to go public, so it's kind of nice, ex-biotech companies, to have close to $100 million in trailing 12-month revenues. It's not a mandatory number, and it certainly won't be true for the AI companies, and it certainly isn't true for biotech, but some scale just makes a transaction more appealing to institutional investors who can put more money to work.
So the market backdrop is considerably different this year than it was last year, right? We had a falling market. We had virtually no IPO issuance, as we've talked about. But if we take a snapshot of where we are today, we're here in mid-July. The NASDAQ's up 30%. The S&P's up 15%. The VIX, which is the volatility index, is around 15. Anything below 19 is considered IPO market friendly. So the backdrop seems great. And it sort of begs the question of where are the companies, which we kind of addressed at some level a few minutes ago. What's your sense of where the investors are? They had a tough year last year. The markets are carrying them forward this year, but where's their appetite for risk, do you think, and willingness to chase alpha?
Yeah, I think there's tremendous interest in new issues because institutional investors are all scored on a relative basis. And if they all own NVIDIA and Microsoft, they're all going to look the same. So they're looking for new companies in which to invest. But they're not going to pay, for lack of a less technical term, stupid valuations. And so that's really where the issue will be is, can the founders who saw what kind of valuations they received in 20 and 21 understand that the market is meaningfully different? And yes, it's way better than it was a year ago, but it's not going back to those levels anytime soon. So, but I think the right business model with the right compelling business, and again, we're pulling AI out of this for now, will definitely attract the big institutional investors who are looking for something new.
Yeah, so that's my sense as well. So I think what I'm hearing is, 100 million or more revenues, right? Path to profitability, which means that there's an inflection point within sight if you're not profitable today. From where I sit, as an equity capital markets banker, I feel like that's 1, 2, or 3 quarters. It's not a year or 2 years, which I think you agree with. Thank you so much for sharing your thoughts. Enjoy the rest of the conference, and we appreciate your time.
Thank you. It's been a pleasure to be here.